Hey, here I am. Do you also want to be able to catch a Bitcoin rally all the way from the peak of bottom, all the way towards the top? All that you have to do is watch this video. In today's recap, we're going to show you exactly how we did it. But guys, first, let's check out where we are.
Something told me it was over.
The timing of price is the most important confluence for high probability trades. It's not about what level Bitcoin hits or what move Bitcoin makes, it's about when it hits that certain level or when it makes a certain move. Very often the highs and lows for the day on Bitcoin form during certain hours. Around 50% of the time, the high or low for the day on Bitcoin actually forms during the first 3 hours of the day, but there's one more hot zone in time, which is between hour 12 and hour 14 UTC timing on Bitcoin. These are two major time zones where Bitcoin very often puts in the high or the low for the day. It's almost like Bitcoin is a body clock. Either early in the day or around midday, very often the daily high or daily low gets locked in. Any other random hour, guys, it basically means that the probability of that high or low to hold for the rest of the day is much less likely. This means that if I take this into account when analyzing the chart of Bitcoin, I am already way ahead of the people that don't take into account how important the timing of price actually is. And it's not just about daily timing. Weekly timing is much more important on Bitcoin even. Most of the time, around 83% of the weeks actually, Bitcoin puts in the high or the low of the week on either Monday or Tuesday. This means that if I see a big move happening early throughout the week, I'm already thinking in my head, this might actually become either the low or the high of the week. Timing is like a massive cheat code. It doesn't tell us how to look for a reversal, but it tells us when to look for a reversal. Now let me show you guys how I use this in my advantage on my own Bitcoin long trade. Alright guys, enough theory. Let's break down this trade and let's jump into the charts. But before we do, I really need a cup of coffee first.
That girl walking down. Ooh, I would rather go blind, boy, than to see you walk away from me, child.
Before we use any statistics, we always have to form and figure out a bias based off the chart. And what we can see right over here on Bitcoin, a few hours before I decided to enter this massive long trade, is that Bitcoin saw this massive push to the upside. And after seeing that massive push towards the upside, as it does so often, Bitcoin started slow grinding towards the upside right over here. Now, where many people, after a very impulsive move towards the upside like this one over here, are waiting for a pullback on Bitcoin to then position themselves long to target higher levels, what Bitcoin often does is that it doesn't offer that opportunity to a lot of people, and instead it starts slow grinding to the upside, and that slow grind to the upside at some point results in a very aggressive squeeze. This is something that we see so often on the price of Bitcoin. Also to the downside, right? You have an aggressive impulse to the downside, slow grind to the downside, and then see another aggressive impulse to the downside afterwards, because everyone is always waiting for the pullback to also position themselves long. So I knew that either Bitcoin was gonna hold on to this low right over here, and if it would break that low like this, then I knew that a lower pullback would be coming, and then often you flush towards much lower targets to take out some sell-side liquidity. So I knew Bitcoin was at a pivotal area, and I also knew that my drawn liquidity was resting much higher. It was resting above that high right over here, and I know that as long as my drawn liquidity, which in this case was above this high, hasn't been hit, I remain bullish and I want to look for longs. But now you guys are probably wondering, how does the timing of price align with everything that I've just been saying? Well, let me show you guys in the back right over here using the Brighter Data dashboard. What we can see when we look at the Brighter Data Statistics dashboard, which to me is a massive cheat code in trading, we can see that Bitcoin likes to form its P1 for the week on either Monday or Tuesday. There's a 62.5% probability to form the first pivot of the week on a Monday and a 21.2% probability to form it on a Tuesday. So that means that in total, there's around 83.7% probability to form either the weekly high or the low of the week on Monday or Tuesday. Now before we continue guys, many of you have been asking me, if I was able to arrange a discount code for brighter data, which is the statistics dashboard that I've been using now for over a year. I've been talking to the owner and we made it happen. Right now, at the top of the description of this video, you guys can find a coupon code, a discount code that you can use on Brighter Data's website to get a 50% discount on your very first Brighter Data membership. All that you have to do is use the discount code, follow the first link in the description, sign up and start using the dashboard yourself. What we could see on Bitcoin is that we had the weekly open right over here. After that weekly open, Bitcoin formed its weekly high over here on a Monday, and then we formed a fresh weekly low over here on a Tuesday. So I knew that if Bitcoin wanted to hold on to that slow grind and wanted to hold on to this low right over here and see another push towards the upside, I knew that we had to form that low either on Monday or on Tuesday right over here. So I knew that today had to be the day to form that strong weekly low, because we know that there's an 83% probability to form it on Monday or Tuesday. So I knew it was now or never for Bitcoin, because currently it was a Tuesday. And when we look at the daily timing statistics for Bitcoin, we can see that there's two timing windows where Bitcoin really likes to form the first pivot for the day, aka the high or low for the day. It's either between the first 3 hours of the day, 27.4, 13.6 and 8.4%. Together, that's around a 49% probability to form the first pivot of the day during the first 3 hours. But there's one more timing period, which is in between hour 12 and in between hour 14 UTC time. This is when a New York session opens. And this is definitely a timing period where Bitcoin very often also forms the high or low for the day. And when we mark out a timing period between hour 12 and hour 14 over here with these golden lines, we can see that Bitcoin was forming a strong low right over here exactly in that timing period, while sweeping major sales and liquidity beneath the low over here. And it was also on a Tuesday. So I knew that if Bitcoin was going to form a potential low for the week before bullish expansion, it was going to be from here. This was a pivotal moment for Bitcoin, both based on timing, but also based on my bias and based on structure. So at this point, I've got all the timing confirmation that I was looking for. Price is potentially forming the low of the week on a Tuesday, which is a very common day to form the low or high of the week. Also, the low that we are forming is in between hour 12 and in between hour 14 UTC time, which is a very common and strong timing period to form the low for the day. Now, all that we need in order to actually execute a trade is for structure to give us the confirmation that we are seeking for. But before we hop into the structure and the entry trigger, let's go outside and talk bigger picture for a minute.
So you see, I love you so much that I don't want to watch you leave me, babe.
Now that you have seen that timing is adding an extra edge and extra probabilities to our trading system, I also want to stress why timing actually is so important, guys. Because as I always try to tell you, we always try to trade with smart money. Now we know that smart money is only active during certain hours, which is, for example, why I always tell you guys that if certain moves or reversal structures happen during weekends or during bank holidays or during certain hours of the day, we cannot trust those moves. Why? Because smart money is simply not active during those days. And if smart money is not active, they're not able to fill their orders. And do we really think that if smart money is not able to fill their buy orders, for example, they would really let price reverse towards the upside, make a massive move without them being in a position? Obviously not. So what will smart money then do? Push the price back towards that low, which was put in at a low probability hour or a low probability day, use that liquidity that was then engineered beneath that low to then still fill their orders before actually reversing the price back towards the upside. And now we know that at the end of the day, all that we want to do is trade with smart money, because they are usually on the right side of the move. And at the end of the day, it's still a game of probabilities. Many people think that if we are trading with smart money, so for example, when we now use timing as an extra confluence, that we are always going to be right. But you have to remember one thing very carefully. I have a win rate of 67%. I would consider myself an extremely profitable trader. I've proven it for a longer period of time now. But with a win rate of 67%, it still means that I'm going to be wrong 33% of the time. which is still a massive amount.
Gib, maybe a dumb question, but how do we actually know the price is going to reverse at those times?
That's actually a good question, Max. We never know for sure. Like I just said, we are playing a game of probabilities. And the probability is never going to be 100% that something is going to happen or that smart money is going to reverse price at those certain hours of the day or at those certain days of the week. But what we do want to do as a trader is always try and play the highest probability setup out there. And if we exclude certain hours of the day to trust price to put in high probability lows or highs, or we do exclude certain days of the week to put in high probability highs or lows for the week, then we know that we're going to increase the probability of our trades, which will also increase the profits over a longer period of time. You either understand how smart money thinks, or you're just meat on the table. But now that we have timing aligning with our bias, we still need structure as always to confirm a potential reversal before we can even start looking for entries. So after Bitcoin swept the liquidity over here, in this very strong timing period, I was waiting for a break of structure. And when we play the chart, we can see that Bitcoin indeed offered a beautiful break of structure towards the upside right over here. Now, why is this a high probability break of structure? Because the high that we break through over here was a significant high to break. Because it brought us to a lower low over here compared to this low that brought us to that high, and therefore we are looking at a high probability break of structure, which means that the session low, the daily low, and at that moment in time also the weekly low became a high probability invalidation to hold for the rest of the day for Bitcoin. Now the final confirmation that I'm looking for with this strategy to enter and execute a long is for Bitcoin to form a fresh session high after hour 15 has started, because this sweep of the session high and this fresh session P2, the second pivot of the session after hour 15 has started, confirms to me that the session low based off timing is likely going to hold. So what I was waiting for was exactly something like this. And once I got this sweep of the high on Bitcoin, that's when I started looking for executions on Bitcoin right over here. I was looking for an entry over here with my invalidation beneath that session daily and weekly low for Bitcoin, targeting the drawn liquidity that we discussed at the beginning of the video. And what we can see is that after our trading idea on Bitcoin got filled, we indeed saw a massive pump, and eventually after a little bit of waiting, based off structure, liquidity, and very important, the timing of price using the Brighter Data Statistics dashboard, we offered ourselves a beautiful RR of 4.3 on our trading account. Here's the proof of profit on the Bitcoin long trade that I just recapped. Over here you guys can find the trade signal that I shared beforehand. Now this, guys, is how I use both timing of price in confluence with my bias and structure of price to get to high probability A+ setups. Now also a massive shout out to Brighter Data for providing all of these massive statistics that I've been using now for over a year, that I've been thoroughly enjoying, and that has improved my win rate from around 57, 58% all the way up to 66, 67%, which is obviously a massive difference. Don't forget, the 50% discount code is still valid and you can find it at the top of the description down below in this video. Navigate towards our website, get yourself a Brighter Data subscription, and I'll catch you guys on the next one.